अपना course. Get smart. Get ahead.
Hello friends, my name is Balaji Rajkumar. I have done MBA, graduate in CAA, and I am a PMP certified professional. I have a total of 20 years of work experience in banks and IT companies. I love training and I love giving little knowledge I have to other people. So that is one of my passion. So that's a small introduction from my side. So we will be looking at the payments module. I'll be talking about the payments module, the types of module, and overall the players, and all those information will be given by me. So it will be really interesting and very simple to understand. And this has been facilitated by apnacourse.com. The topic that we are going to discuss is payments. You could have heard this term payments in multiple instances, in multiple occasions. Some trader will say, I'm going to make a payment. A small trader who is selling vegetables will say, I need to make payment. Similarly, a share market trader will say, I'm going to make a payment. So this term has been used by each and every individual in any part of its life. So let us see what payment is. The intention of this presentation is to understand what payment is, what are the various institutions, and what are who are all the various players who are there in the market and how they operate. So we thought that this presentation will help you understand what are payments. So the first topic we are going to talk about is what is a payment. We are just going to give an introduction to payments. So the list of topics that we are going to see today is payments introduction. Then we are going to see what are the importance of a national payment systems. And then we'll see what are the types of payment transactions. And we are going to see what are the various settlements in payment systems. Okay. Now we'll see what is the definition of a payment. A payment is a transfer of an item of value from one party to another in exchange for the provision of goods, services, or both, or to fulfill a legal obligation. So a simple and common type of payment is you go to a store, you buy something and you pay for it. That is a simple form of payment. That is, you need something, you need a goods or services. You go to a store, you have money, you give the money to the shopkeeper, he gives you the goods, and then you get the goods and the transaction is complete. So this is basically the item is getting transferred from the shopkeeper to you and you are giving him money. Earlier there was no money, there was no currency at all. So what people used to do, for example, a person will have a lot of sheep with him, and there will be another person who will have a land, you will be doing agriculture there, and you will be having a lot of rice. So the person who is agriculturist, he might need wool. Similarly, the person who is having sheep will need rice to eat. So they came into an agreement like, okay, I will give this much wool to you. You give me this much rice. So that value and that amount is actually arrived between themselves. There was no currency, so he will say, I will give this much of wool and you give me this much of rice. So this is actually was followed before the currency was introduced, and that system is called the barter system. So barter system was abolished when the currency came into the picture. Now we use currency to make the payments to buy anything. There's an alternate definition. So payment is the transfer of one form of goods, service, or financial asset in exchange for another form of goods, service, or financial asset in proportions that have been previously agreed upon by all parties involved. So you want to buy a house. You pay the money and get a house. So there is a financial asset. You pay something and you get something. So even the proportions and how much you need to pay, what is the square feet value, those are all determined. When you pay this much of money, how much square feet of house you will get, that is also determined. So that is the basically you make a payment to get a house, and what is the proportion, what is the amount that you are going to pay, that's all been discussed and decided. So that's what it says. It has been previously agreed upon by all parties involved. And the payment can be made in some form of funds, assets or services. Okay, we spoke about payments. So in a country there are a lot of people, each and every individual have different payment needs, and the needs are varied. For example, there is a person whose son is in the United States, and he will be expecting money from his son. So the son will send money from the United States. His son will go to a particular institution in the United States, and he will be sending money to his father. And the father will go to that particular institution in India and then receive the money. This is one example. The other example is where a trader, he wants to send money to a person in Mumbai. Let's assume this trader is in Chennai. He actually needs to transfer money. How will he do? He will actually go to a bank, or he will go to a particular financial institution and then do a funds transfer. So each and every person needs somebody like an institution who takes care of the needs of all the individuals, because each and every individual have various payment needs. So that has to be taken care of by an institution. So a lot of institutions were formed. The financial institutions like banks and these funds transfer institutions, a lot of institutions were formed, and they started transferring funds from one person to the other person. So the payments were facilitated by these institutions. Okay, once these institutions have been formed, that has to be regulated by somebody, correct? So that is also been regulated, and once it is regulated, the transfer of funds happens by a technological driven process. For example, let's take NEFT. You go to a bank or you sit at home, you open your account in the internet banking, and then you debit your account and transfer the funds. And the bank, when they get the instructions through NEFT, they transfer the funds to the other bank, and the other bank immediately transfer the funds to that account holder. So though it looks simple, there is a lot of technology that is involved, and these banks are actually monitored by RBI. So there is a system here. It's not that I just transfer the money just like that. There is a system here. A lot of institutions are playing here, and there's an infrastructure of technologically driven process, and there are a lot of players here, and each transaction is regulated. There are a lot of guidelines, there are a lot of regulations in it, and this facilitates commercial and financial transactions between buyers and sellers. The national payment system is basically a combination of all these institutions, where they are supported by the technology driven process and practices, and they facilitate transfer between buyers and sellers. Basically, the payment system operates through the demand and supply as in any other market. So on the demand side, the users need payment instruments and services to meet their various financial transactions. And on the supply side, there are people who have the payment instruments. Okay, so these transactions happen through the national payment system. So the payment transactions that I was talking about, one example is the NEFT transaction. The other transaction is the point of purchase transaction. Now, most of the people, or in fact almost all the people, have debit or credit cards. So when you go to a restaurant or when you go to purchase something for your house, you need not carry cash. You go there and you buy the goods and then use the point of purchase transaction system, and then you give your credit card and make the payment. So these all form part of payment transactions. A small example is you go to a trader and use the card. So that is also one payment transaction. Or it could be large scale bank transfer transactions. Banks might need money on a daily basis. So banks borrow and lend money. So that also forms part of payment systems. So we saw about the demand side. The supply side consists of banks and institutions offering these services which provides them with revenue. So basically, I need a service. I need to do a funds transfer. The banks are providing the services and they provide them with a revenue. So I will be charged some fee for making the funds transfer, but I am satisfied that the transaction is 100% complete and it is safe also. But the banks is offering technology to you, so for that they charge you some fees. So this also opens up markets for providers of technology and communications products and services. So as the demand increases, the payment transactions increases, the suppliers also increase and more markets and providers come into the picture. As I said before, banks and financial institutions interact with each other through messaging and routing systems. A lot of messaging systems that happen between banks, and they route the funds through various procedures and systems. So based on which our demand for transfer of funds is facilitated. Okay. We spoke about the national payment systems. Now let us try to categorize what are the transactions that are performed in the national payment systems. The first one is the retail clearing and settlement. The second one is the large value clearing and settlement. The third one is the securities clearing and settlement. When you say clearing and settlement, it's basically the transactions are settled between parties. There is a person who is on the demand side, there is a person who is on the supply side. So they exchange goods or they exchange money and it is settled. What is the importance of national payment system? So national payment system ensures that all the payment transactions are conducted systematically, benefiting the person who makes the transfer and the person who receives the transfer. So basically facilitates both the people. So when you say a country's banking and financial history, it is actually reflected by the payment system. So basically when the country's financial history and the banking system is very good, it means that the payment system is operating without any error or flaw. It also ensures that the supporting communications and technology platforms improve and advance along with its improvement. So what happens is when there is a new requirement, the technology is used. So now we have a lot of mobile apps and all those things. You can use your mobile to transfer funds, which was not there earlier. So whenever there is more demand for a transaction to be done, this payment system uses new technologies and communication platforms, and more technology improvement also happens. And as I said before, there is a lot of processes, a lot of procedures, and so this actually improves the payment processes and procedures that are carried out by the operators, administrators, regulators and users of the system. So for example, if I need to transfer funds from my account to a person in Mumbai, I cannot put it in an envelope and send it by post. It might get lost and or it might be misused by somebody. But in this particular case, I am using a particular bank who is an operator, and I am using a system called NEFT, and I am using a technology, and this transaction is regulated by RBI and the transaction is safe. So basically the payment system is very smooth and everyone is happy. This is facilitated by the national payment system. National payment system are hence vital to the integrity of the global financial system. Earlier we spoke about the various types of payment transactions. Now let us see what are they. So when you say retail, it's basically small transactions, like for an individual who does a transaction. So as the slide says, it's basically the retail system are responsible for the processing of small scale financial transactions. While there is no definition of a small scale, basically all the transfers of less than $1 million will be constituted as a retail clearing and settlement. Then we talk about large value clearing and settlement. All transactions with a value of $1 million or more will be categorized under large value clearing and settlement. And the third one is the securities. Securities, you know, right? Shares, bonds, and various money market instruments. So when you want to trade in a share, you need to use a particular system. So those are all regulated by the security system. So security systems, they handle the clearing and settlement of shares, bonds, and other type of instruments. And as I said before, each and every transaction has a rule and regulation in it, and they ensure that the transaction is done as per the rules and regulations. Now let us see what is the settlement in payment systems. So let us understand what is a settlement. For example, a bank A will have a lot of customers and they will be making funds transfer transactions to bank B. Similarly, bank B will be making a lot of funds transfer transactions to A. So there will be a lot of hundreds and thousands of transactions in a day between bank A and bank B. At the end of the day, they need to do the settlement. So this settlement can be done on a gross basis. Gross basis is when the settlement of funds or securities takes place individually, one transaction at a time. So for each and every transaction there will be a settlement. Like in the statement, okay, if one transaction is done, okay, I will do the settlement. Transaction 2, a settlement is done. That is more difficult process. The other one is the netting basis. Netting basis is where basically you add all the transactions and then you see how much money bank A has to give bank B or bank B has to give bank A. So at the end of the day, all the transactions are netted and then you arrive at a particular position and only one transaction is done. So even for NEFT, when I say there are a lot of time zones and multiple transactions that are performed or netted together into smaller batches. And these batches will be processed and settled at a particular time rather than on a continuous basis. So this actually ensures that okay, within this time these transactions will be processed and after that cut-off time it will go on to the next batch. So this is a netting basis. So the settlement in payment systems can happen on a gross basis or a netting basis. Thank you.
Apna course. Get smart. Get ahead.